Good day, fellow investors. I received so many comments about China, Evergrande, systemic risk, and in this video, which is part of a free video series about news, dividends, and passive versus retail investing, I really want to talk about the news, but also about the perspective we have to have about those news and how it impacts our investing. This is part of What Kind of an Investor Are You series. So let's immediately start by discussing the stock market, investing, and the impact of news. If we look at the S&P 500 over the last year, you can see here over the last few weeks there was, let's say, a small dip and a bigger dip over the last week based on Evergrande fears. And it is a dip, but the same happened. This was February, we had some in May, we had some in July, some in August, and a little bit bigger in October 2020, but the pattern there has been steady. These small dips are when investors react on fears given by the news, but they miss the underlying trend, which is that the Fed is printing money, and as long as the Fed prints money, stocks are going up. And to dig deeper into that, let's just look at what the news are saying and compare that with what is core for investing. You will always find news, the S&P fell so much, and here is what 4 experts are saying about the market sell-off. Should you sell stocks? Should you not sell stocks? And these small changes, 2-3% in a day, really attract a lot of people, a lot of eyes, and news outlets react and give some content, because that's how we make money also here on YouTube. But if we are looking at what is troubling investors, then there are many reasons. There is the property market in China. What will the central bank announce? What will they print more, print less, lower interest rates? Then we have, of course, what the variant of the virus will be there. And September has the worst track record of any month to just add something. Brinkmanship in DC, so a lot of things can worry you. But that's the key when it comes to investing. You can let things worry you, or you can just invest into things that you can know or think, or let's say have more weight than news. Just a comment here. So US stocks react like this, react like this, that if you follow those news, you end up a crazy person, which the market actually is, a manic depressive person offering stock prices. Don't follow that route. This is nice. This was the May drop, and what happened? Commodities decline as inflation is what worries investors. This was back in May of this year. Then the Dow drops more than 700 points. This was the bigger dip in June 2020, so virus was the issue. And there is always something bothering investors, and I think in the comments below I received about 20 questions. Sven, what do you think about Evergrande, China, systemic risks? So let's touch on that to give you a perspective on how you should or not react to the news. So Evergrande, debt crisis is the financial stress nobody wanted. China stocks, however, jump on Evergrande respite. Major Evergrande backer Chinese estates may sell, so it's uncertain, it's unknown what will have, and people are still reminded of the past. But then the Fed is this time saying that they will taper but slowly, and stocks gain. And this is really important, because you never know what and how the market will react. Before digging deeper into Evergrande, I just wanted to tell you I'm switching a little bit my YouTube work, and I will publish videos only in the last weekend of the month. So 2 free videos per month. I'll focus on research, adding quality also here on YouTube, so make sure that you click that like button, subscribe, and click that notification bell so that you are notified when a new video a few times per month comes out. I'm a little bit tired of playing the YouTube game, of chasing, of grinding. I've been grinding for 15 years, and now I'll focus on research, work, and from that I'm sure you'll get even more value. So please do that and let's continue with the video. As said, I've received a lot of comments on Evergrande, and then again also people already know what will I reply, which was very interesting, and this was a nice comment from Barrios. Sven, we need help breaking down the effects of the 300 billion debt from Evergrande. And then I go just dig 10 seconds into it. 300 billion debt, systemic risks. Let's see about the real issue. So the first test that came for Evergrande, it's not 300 billion, it's 83 million of interest relating to the March 2022 bond on Thursday. And then it has another 47 million payment on September 29, and only if they are late with 30 days, then they are in default. But of course, we have seen 2007, 2008, 2009, and now people are expecting, okay, now we have Chinese real estate defaulting, it will systemic risk all over the global markets, we are headed into a depression, we better sell. And that's why you see more people selling, and you see those 2%, 3% dips in what's going on. But people have learned some things from 2008, 2009, so there is the reaction, the Fed's reaction, the Chinese reaction, and then also with real estate there is the asset that backs the debt, and it depends on how China manages those prices, guarantees, liquidity. So it is all an evolving situation, and you cannot know what will happen. Everyone looks at the stock prices going down and panics. And it's actually the panic that impacts the market, not the actual debt solution. Evergrande has been junk debt for the past I don't know how many years, so junk debt is bound to go bankrupt here and there. What's the news there? But of course, banks, mortgages, everyone is panicking there, so that's normal. But also, the biggest crisis was there in the Americas, United States, and the Fed has reinflated the housing bubble since 2012, and now we are even higher than it was the case 15 years ago, but nobody talks about it. It's okay. When something goes wrong, then people start talking about it. You wait a few days, a few hours, and then news come out that China has it under control. If you sold stocks 2 days ago, now you're rushing into buying, and you have lost 2% of your portfolio. Of course, Evergrande investors have lost, but here I want to go into the detail and why this is something should be normal. So these jumps are usually on leverages, promises, and Evergrande was the largest company there, 800 projects almost, 234 cities, big land reserve. But then I look at the balance sheet and look at this, total liabilities 1.9, what is it, billion or trillion Hong Kong dollars, total equity and liabilities 2.3. So they had 2 billion on liabilities or trillion on equity of 400 million. In real estate, where sensitivities are really a little bit changing here, revaluation, and if you can't sell, like in this case, at the prices you expected, you don't have the liquidity and you go bankrupt. That's the real estate, highly leveraged real estate business. If you're from the United States, ask Donald Trump. He knows best how to go bankrupt and then rise again from that business. What's the game there with high leverage? So it's something that was in the air for a few years now. And now people are asking me, okay, Sven, how will that have repercussions? Of course, we didn't invest in Evergrande, but on other Chinese stocks. And the question, of course, is about Alibaba. And then I reply, okay, what will the repercussions be on China? If we look at Alibaba, it is 1.18 billion customers, fastly growing, international with 265 million customers globally. If we look at average growth rates for Asia, Asia Pacific, the areas there, we are at an average of 4-5%, no matter what Evergrande happens. Maybe there will be a slowdown. We had COVID last year, but economies are still growing. And then if I look at Alibaba, for example, if they get a customer and given the digitalization of purchasing, their average revenue per user after 5 years of having a customer grows 4 times. If I go back to this, 5% on average growth, digitalization even more growth. If I put 2 and 2 together, a double in sales, as especially now with the news of common prosperity, so sharing with more people, even lifting higher the middle class. What do you think? Does the middle class buy Gucci shoes in a shop or buy on Alibaba, on Tmall? A double plus 4x in revenue, that's 8x in revenues for Alibaba in 10 years. That's possible on the news I'm getting from there. As said, are they buying Gucci or toothpaste online? And if I go to my intrinsic table, this is the public one, you can download it in the link in the description below, and the premium one is on my stock market research platform. If we check on Alibaba, we discussed there the cash flows per share, these growth rates, you see whether it's higher, a little bit higher, but the intrinsic value for a 15% return is approximately $200 per share. So when the news pass, you get a great return from investing. Then they asked me a lot about the news about Alibaba making donations, 15 billion donations, yes, over 5-7 years, depending where Alibaba, how it puts. And then I think, are they buying permission to keep on keeping on as they have been doing? If that, then Alibaba is even stronger. Regulation. Regulation suits better, biggest players or the smallest starting one? And that's always something you have to weigh, and you see over a year, 2 years, 5 years how it ends up. If you look at the risk and reward, if the growth is 10% per year, it's still great, and that's what value investing is. Worst case scenario, am I okay? Yes. Best case scenario, I am great. And that's what we balance. And constantly checking the news would make me go crazy, so forget about the news. Think about long-term business prospects. And also, let's say that the news materializes. I always know I can lose 100% on any of my investments. That's a given. Therefore, I have 5 investments. I will lose on one everything, 2 will do nothing, but 2 will do great. Over the long term, I'll do really, really well. And then we get to a deeper point when it comes to investing. If you're following the news, that means that you are not investing in the business, you're investing in, okay, I'm buying this stock because it needs to go up. I need it to go up. Come on, come on, come on. And that's then, when it doesn't go up, then you start selling. The majority of you start selling, it goes even lower, and real investors buy and get great long-term returns on average. To emphasize of that, if you have a business, if there is a hiccup, if there are some issues, what do? Do you run and sell your business, or do you try to solve that and get even stronger out of the issue? If you have a business, please let me know in the comments. And how do you react when your business has some hiccups? The latest news, the Fed, so stocks gained because the Fed signaled they will scale back asset purchases, but if the economy needs it, if stocks crash, we will print another trillion or trillion and trillion and put it in the market to save your highly leveraged long ass. That's investing, so they are postponing raising interest rates. Yes, this is a very nice picture. Maybe they'll get to here and then they'll print inflation likely, and that's the real news. And no matter what someone says, it won't change much. So the solution is invest for the long term, buy businesses that will do well no matter what, understand the environment, the long-term environment, the debt of the governments, how that will be solved. There's only one way: printing, printing, printing money. And if we go here, I've seen it, I lived through it twice, how much money can be printed. That's insane. It's just a little bit more digital now. So that's something to think about where we are. And this news around, of course, China will print money to save everyone, or they will let them go bankrupt to be an indication of, okay, if you do that, too much leverage, you're going bankrupt, we are not saving you. Others will also think about, ooh, and the system will be stronger China is a little bit smarter, might be a little bit smarter than we in Europe especially. And then if you own great businesses, it's always better to own them at a lower price, accumulate wealth, reinvest dividends, which is what we'll talk tomorrow in the video about dividends. Smash that like button, consider subscribing, and I'll see you tomorrow.